Good morning. NYSE Gap Open List, 6:11 a.m. Pacific Standard Time, June 1, 2011. A lot of what I have said as far as the NASDAQ market goes, you can go to that video, watch that, because it will apply to this one. So that way we can save some time. The thing that we're looking for is an ascending 1.00 or higher dollar gap ratio, and we have 1, 2, 3, 4, 5 stocks. When you find out what's going on with that PVH, that BLK, that's a trader right there. These SEE and SHG, they must have some kind of news headline tagged to it. The thing that we're looking for is what is the most powerful side of the pre-market futures. Well, let's take a look at the gap open down on the NYSE. I've got a bigger list that goes right here to BCO, and that's 1.00 ratio higher to qualify. And I've got Cummins, Caterpillar. They were buying all of these stocks: Goldman, Potash, Deere, Cleveland Cliffs. We have Oxy. Oh, that was a real good one off its original. Boy, that was a great short a month ago, all the way down to support. These were the names that they were buying yesterday on the last day of May 31. Holiday, Memorial Week, there was 3 good days of consecutive buying in light volume on these listed stocks that when we called for that correction in May, you go find it there. Correction was around the corner. We announced it late April. May, we said May was going to be a month where the bull rally would pull back. Bull rallies have bull rally pullbacks. Some of the economic data right now is out. You got MCP, that's one that you guys make markets on every day. So you've got some economic data that's out. Tiffany is an overbought stock. A lot of our trade management is in a lot of these names right now. And the price action volatility at the end of the month. So you had May, 3 weeks of distribution or 3 weeks of decline per se. So therefore when we had that distribution, they came in at the end of the month as a counter rally trend. So it's going to be a touch and go with that buyer and that seller. Are they going to be selling into the moves? Because every single day in the trade management, yesterday it was a big gap up list, and I said sell short on the highs that they're going to come back down. That's exactly what happened. But then they would consolidate with strength throughout the day, and that did happen. And what I'm saying here is that there are some good plays off of the bottom. I will be watching to see if they come in on the Caterpillar trade off the bottom. Now, when they want to make a market in Cummins, CMI, sell the CRM trade, as everyone understands it, has more price volatility. So these names up here, Tiffany, that's a retailer, it's overbought. There's the IPO, gapping down. So we're going to be focusing on where these names that were being accumulated last week, and they were accumulated in the last week of May. And it was a holiday week. We're going to see if that bull comes back in on the buy side, or are they taking a distribution? Economic data could make those people sell now because it's not very good economic data, but just like last year in 2010, we had hit that soft patch and QE2 came in, and when QE2 came in, we all know that we had a long month bull rally, consecutive month after month, and that has strengthened this bull rally. So when this bull rally pulls back, the only way you're going to know is distribution and accumulation, and where the price action levels hold and are accumulated higher. When price action is accumulated higher, then you have more strength on the intraday move. If you are selling up at lower highs, short with reversal bars immediately. That means that they're breaking the previous half bar. That means that that distribution's in play and that the short side of the tape, the weak side of the tape, would be paying the money. So the bear reversal would be paying money. It's how they're going to hit that support level. And when they bounce, if they don't bounce 3, 6, 9, and they have to bounce, when they are bouncing, they have to bounce 2 times greater in that 3-minute price action bar than the previous bar. Okay? Because that is showing that that is where people wanted to really own it. And that it finally has hit its bottom, whatever time of the day that may be. Could be in the last 10 minutes of the day. Could be in the first 10 minutes of the day. Who knows? That's between the public. You're to watch how that transaction is going to take place and how to use this futures market to understand where those reversals show up and how they would show up if they do, and how you would look at that side of the tape on making profits as far as understanding directional price action movement long and short intraday between the public. So we got a bigger gap open down. I like the gap open up today. And excuse me, I have a cold, everyone. What we do have here is we got key names that we are going to look up the news here. BLK is the number one. This one here has got good price movement and price action volatility. Okay, so when these pull back off their highs, it's how they're going to respond, that buyer and that seller, at those lower support levels. So you make the high, you pull back down in our platform. When you pull back down and you have an immediate reversal, a 3-minute buy action bar starting, and you're taking out that previous downside half bar, meaning that when you clear that, that is a change in movement. Identifying the change in movement and directional price action movement with the public is very, very important. It's June 1, 2011. We're going to see exactly where we end up between now and Friday. And this is the calendar month, MMTs, that is starting, so that we can see how the gap open down was greater than. Greater than means more. At 1.00 or higher. That's the list. Now, over here, you have 1, 2, 3, 4. So you got 1, 2, 3, 4, 5, 6. But it's a very light list for the NYSE. 60% of your program trading happens right there. And it's program electronic trading. And people don't understand that. However, we will be training you on that electronic trade and how it works with these names. So that's how we're starting out calendar 1. We're starting out with the week ADP report. There's economic data that is part of what the bull is going to have to deal with, and we'll be on high alert with the indexes and the indices and the sectors. Which sectors are outperforming others. More importantly is seasonality. There's a lot of things that go on. Not to mention that you've got a July earnings season, 30 days, the next month is going to be that. Now, traditionally we do have summer rallies, and the thing about it is that bull is going to have to show up. That bull will have to show up. So if we do continue to correct in June and go lower, then we would be looking where that bull would step back in for what we would call a summer rally. However, the markets remain elevated and overbought.